Welcome to a new video on opportunities this week from Bravisa Tree. In this video, before going to the opportunities, let's look at how the markets are, get to know their strength and then look at the stock. The Nifty has been going up and up while the broad markets have been in a correction mode. Defensive sectors have clearly taken over lead from the cyclicals, while when we look at the sectors, metals and commodities are still holding their lead, whereas they are getting slightly weaker as they are going up. These new sectors that are showing up strength are from IT, FMCG and Services. The new sector that has come up now has a pattern that shows it can continue to have some more upside, while the stocks and the index have been registering lesser volumes as the index is going up. This is kind of a warning that the ride is not going to be as rosy as what the market is expecting. On the FMCG sector, most of the stocks have registered very big upside in the last week, precisely on Friday. That upside should have brought in a lot of steam in them to continue in the upside. While keeping this in mind, we can take some exposure in FMCG and along with that IT and services. This should help us have an edge with the market as it is going up. While when we have this position, we should also be very careful to take an exit when the market tops up. So this can be a short run, which probably about 2 to 3 weeks will be the opportunity, and at that time we should look at some profit booking so that we maximize our returns against the index. Though it has been a tight market, even in that we do have a buying opportunity from the finance sector, and that too a stock from Nifty. This week's trend buying opportunity is in HDFC, Housing Development Finance Corporation, not the HDFC Bank. The realty sector has had a beautiful turnaround couple of months back, and that brought huge opportunities for housing sales and which will create momentum for housing finance companies. Though the realty sector which took off kind of has gone slumber now, the finance of housing looks like it's continuing to have momentum. That is the reason we have a buying opportunity in the housing sector and from a Nifty stock. Now, as the market is at the peak and valuations have been pretty stretched, it is good to have lesser exposure in the newer positions that is going to come in the markets from now on. And also, one more important understanding that you should have with all the opportunities that we provide, we are not giving 100% winning positions. All that we do is we select high probability winning potential trades in the market and help investors take advantage from them. So there is a potential for these trades to go against us too. To avoid losses, have a strict stop loss so that in case the position turns against us, we are protected with lesser losses and have more funds with us left over to take the next position. And since HDFC has already done a significant move prior to the signal what we are talking now, chances are, as the stock is moving up from here, it will retrace weakness at the higher levels. So, a good option would be to book maximum profits when the stock is at 2,900 levels or when it crosses 2,900 levels. When it crosses 2,900, check for volumes. If volumes are not great, it's better to exit the full position. If volumes are significant, take maximum profits out of your position so that you have made your profits and the balance position can keep running as the stock is going up further. In case it turns around and falls, we are already having some profits booked in our kitty. So HDFC is a buy above 2,770 for this week with a maximum profit booking exit at 2,900 above. As the housing sector has been getting ready to go on a ride, we believe that it will also help us make some profits on the way and bring some laurels into our accounts. Thank you. Happy investing.